episode of Season 14 of ECCB Connects. We're happy to be back with another season of this informative and engaging program produced by the Eastern Caribbean Central Bank to share with you who we are, what we do, and how we serve you. This week's episode will focus on the COVID-19 Loan Repayment Deferral Program. Stay with us. We'll be right back after this message.
EC Polymer Notes, our new money.
Here's how you can detect genuine EC Polymer notes. Feel. Polymer notes feel smoother than the material from which paper notes are made. Also, the front of each note has raised bumps at the top left-hand corner. These bumps form shapes that are familiar to you. Look for the clear window at the front and back of each note. This window allows you to see through the notes. If you hold the notes up to the light, you'll see the value of the note in an area of plain colored print. Tilt. A holographic foil is on the $100, $50, and $20. The images move and their colors change when you tilt the notes. Remember, detecting genuine EC Polymer notes is as easy as 1, 2, 3. Feel, look, and tilt.
EC Polymer Notes. Cleaner, safer, stronger.
Thanks for staying connected. The Eastern Caribbean Central Bank and the ECCU Bankers Association reached an agreement in March to provide support to commercial bank customers through a loan repayment deferral program during the COVID-19 pandemic. One of the key features of the program is a delay in payment of principal and interest for a 6-month period without penalty. Managing Director of the Grenada Cooperative Bank Limited, Richard Duncan, explains some of the other features of the program.
I think this is the most critical part of this program. The delay, the deferral in collection of interest does not mean that interest is not running. It is running, it is accruing, it is accumulating, and will be dealt with at the expiration or the end of the deferral period. Even if a customer is under deferral arrangements, we encourage them, if they come into resources, to make a payment on the loan. So having a deferral arrangement does not mean that ad hocly, you cannot, when you come into funds, pay onto your loan, and this is highly encouraged. There are two approaches that banks have used in bringing this arrangement into effect. First of all, some banks allow customers to opt out, meaning that they said to the customers, this is available, we have granted it to you. If you do not want it, please let us know. Other banks chose another approach. That is, this is available to you, you need to apply for it. And that is the model which says that you are opting in. So those were the two broad approaches used. So what motivated the banks to so readily embrace this program along with the ECCB? Governor, when I thought of it, I think there are two primary factors. I think commercial banks are genuinely interested in the well-being of their customers. They genuinely care. With the loan deferral program, loan payment is one less very significant thing that customers have to worry about during the pandemic. I think it's a way that commercial banks give the customers the comfort and the confidence that we will work through this difficult, unprecedented period together. Very important for us as commercial banks.
With an estimated 25,000 to 30,000 customers taking advantage of the loan repayment deferral program to date, Duncan says customers have embraced the program with much enthusiasm.
They are truly appreciative for the efforts, the concern, and the care that banks have been showing for their well-being. Those among us who need it most have already taken it up. There are some borrowing customers who take deep pride in paying their debts on time. They tend to be more in the rural part. They tend to be, slightly older than the young ones. And they try to tough it out for as long as possible the first month or so, but eventually, they had to face the realities and so on. And we continue to work with them in that regard. Others took it up in anticipation of problems in the next 4 to 6 weeks. However, things did not turn out as badly as they thought it was going to be, and therefore they have resumed regular payments. So it's a nice mixed bag across the region. From the data that I have seen, I'm estimating that between 40 to 45% as we speak of the loan portfolio in the ECCU is under moratorium or deferral arrangements. And you have, I would say, between 25 and 30,000 customers who are so enjoying that relief, that care, that support that the central bank has so ably arranged with ourselves and themselves.
President of the St. Kitts and Nevis Chamber of Industry and Commerce, Giselle Matthews, said the program has been a welcomed relief for businesses and has created peace of mind for many customers.
It's been a significant relief, I would say, to many businesses on island. I think the numbers anywhere from, and personal loans also, if we're going to speak about in general moratoriums and deferrals, they range from car loan deferrals, credit card payment deferrals, to business and demand loans, to residential mortgages, to auto loans. So it has spanned quite a cross section of the community, which in turn has given great relief to many families and businesses. And I think to date total, we are somewhere in the region of over 2,500 persons benefiting from the loan deferral program in St. Kitts Nevis, and a total of approximately to date $258 million in relief. You, Governor, would have those statistics for the region.
Yes.
And so you can imagine from one small island like ourselves that this is a significant relief. Being a business person myself, I can speak to it because I'm also I've benefited from it. Like Richard Duncan said, you had to apply. Some banks you had to apply, some it was automatic. But what it did for my business in particular, and I know many other businesses, having spoken to many others in the business community and our members, it allowed a relief on cash flow. So it gave us a chance to take care of restructuring payments to suppliers. Just a basic cash flow improvement after coming out of one solid month, 3 to 4 weeks of closure in April. No business, no cash flow intake at all, and then opening back your doors to face many obligations that you left when you closed, several weeks earlier. Those weren't going to go away. So the bank's initiative and the central bank to come up with this program, I think it was something that I think many of us look, and we were going through a period where there was a lot of negative talk about banking, as you know, relationships over the last several years have changed, and how banks function and operate, and the lack of human interaction and being able to go in and really, decisions are made in other parts of the world. I think this gave the business community, and I think the community in general, a kind of a, oh, wow, effect in the sense that the bank came to us first. This was an offering to the business community and to families for relief before having to go and approach the bank. So this was very welcoming from your side and the Bankers Association.
The COVID-19 pandemic has affected all spheres of life. Governments and people around the world have had to put measures in place to protect lives and livelihoods and maintain balance. Director of the Bank Supervision Department of the ECCB, Christopher Ward, said that it was an easy decision for the ECCB to partner with the Bankers Association and to relax some of the regulations to support the economy.
I think throughout this whole process, we've heard that the pandemic has been unprecedented. And that's a word that has gone around. in terms of the closure of our economies. I don't think any of us 12 months ago would have imagined or even start to think about that our governments would have had to shut down our economies in order to protect life. The impact of COVID, and as Richard rightly articulated, is not just in the health sector, but it has expanded and brought out in terms of the economic impact. And for us, in the wake of the COVID pandemic, we have heard the calls for relief from the borrowers. So specifically from those persons who've been impacted, whether it's be from a closure of a business, the loss of a job, the reduction in hours, the cut in their salaries, these are all the things that we've heard as a result of the pandemic. And because of the unprecedented nature of the pandemic, as a regulator, we had to be responsive to our licenses in allowing them that flexibility to provide that support and assistance to their customers. We had to be flexible and relax our regulatory guidelines. These measures, our relief program, loan deferral program, loan moratorium, whatever you call them, and I call them in a nutshell relief programs, they are intended to provide an incentive for the banks to continue to support the real economy. That's a very important point. In all this that has happened, and Richard articulated clearly in terms of the slowdown and the shutdowns and the impact and so on, we are dealing with very real and people's lives, both health and the economic part of people's lives. So for us, it was an easy decision in terms of recognizing the need that these relief programs and incentives for banks to continue to support economic activity, even though we had this shutdown and so on. And it was important for the banks to support the real economy in these times. And we recognize as a regulator an overly conservative application of the regulatory rules would not have helped in these circumstances. It would have led to an increase in non-performing loans, possibly an increase in provisions, loss of lowering of earnings, and pressuring of regulatory capital. So we had to respond, and we had to partner with our banks in order to provide this support. And for us, it was an easy decision to provide that flexibility and that relaxation of some of our regulatory rules to allow our banks to respond and to support the economy.
To view any episode of ECCB Connects anytime, any place at your convenience, check us out on YouTube, Facebook, and LinkedIn at ECCB Connects.
That brings us to the end of this episode of ECCB Connects. Thank you for watching. We invite you to connect with us next week for another program.